Thank you everybody for joining today. Nick, thanks for having me on, or I guess we're on our Zoom link, but thanks for having me on to talk about the TrendSpider platform to your community. And not sure if some have heard about TrendSpider, but I know Nick uses TrendSpider pretty often. So what we're going to do today is just go over, some of the things that really help get an edge in the market using TrendSpider. Nick has a 25% coupon code that he'll share in the chat. So just noting, if you guys do kind of like what you see, we have a 7-day free trial to try all these different things out that we'll be going over. And if you have any questions, just let us know. But TrendSpider is pretty much a full technical analysis platform. You can do pretty much anything on it except trade through it. So that's coming at some point down the road. We'll be able to actually go in and make a trade on, let's say, an alert that you create. But for now, it's just used for technical analysis, and then you're able to make your trades on whatever broker that you have. The whole platform is geared towards making the whole process of technical analysis more efficient. So there's a lot of different ways to do that, from automation of trend lines and Fibonacci levels to raindrop charts, which allow you to see volume flow without having to go into, let's say, a 2-minute candle to see where volume's coming in. We have a scanner, strategy tester without having to do any coding. One of the things that you guys have probably noticed, a lot of platforms, you can do a lot of cool stuff, but you have to have some type of coding background or some type of ability to, write code, which a lot of people can't do, including myself. So we have the ability to make that whole process a little easier. But I'll start with just a plain Twitter chart here. And one of the things that I use quite a bit, and I'll be focusing on some of the things that I like to use on the platform, but also some things that, may be beneficial to others. One thing that I use quite a bit is something called the auto trends. So the auto trends is this button at the top here that allows you to have the system draw these areas for you on the chart. Now, there's a couple different variables here. The first variable is when the timestamp of the analysis was done. So for example, these lines that are popping up here, they were drawn back on December 7th. I haven't been on the Twitter chart in a while. I haven't used the auto trends in over a month. So this is the last time that the system looked at the data and then spit out these lines. Now, the second thing is all of these lines are not meant to stay on the chart. These are lines that really are essentially a bunch of permutations that you can go in and then choose out of all these lines. Maybe there's 2 or 3 that you want to keep on the chart. For me personally, there's already, let's say, a couple lines down here that I would want to lock in. And all I'm doing is just double clicking on these trend lines and locking them in. But then what I can also do is I can update and refresh this and see if there's any other relevant trend lines that may be worth looking at. In this case, we have these 2 trend lines right here, the support and resistance area, kind of creating this what would look like almost like a massive bull flag here. But from here I can go in and I can double click on these lines, and then I turn off trends, and I have a clean chart. So those trend lines are all not supposed to stay on the chart. They're there to be an idea generator. They're there to maybe make you think a little bit about other perspectives in the market. Maybe you weren't thinking of some of these trend lines that the system found. That's what it's there for, to kind of go in and say, hey, well, you have your way of drawing trend lines, but here's some other trend lines that you may have not thought of. And maybe a particular line is making the market and you didn't even think of that. So that is how you can use the auto trends, but also you can change this as well. So let's say that you wanted to do body to body instead of wick to wick on your trend lines. Some people like to draw their trend lines wick by wick. Some people like to do it body by body. You can choose that here. And so you'll see if I choose body to body, the trend lines will change a little bit. And you'll see, well, we could even delete all of these lines right here, and we could have a completely different setup here, kind of this broadening setup that I just highlighted right here. There's so many different ways you can draw trend lines. They're subjective, but they're also something that you want to keep consistent. And that's what this auto trends does, is it keeps the analysis consistent across each stock. So on one chart, maybe you're drawing wick to wick, and another one you're drawing body to body. Your analysis isn't staying consistent. So this helps with that. I personally like to use the analysis type under enhanced, wick to wick, and then I like to really it depends on what chart I'm on. Some charts are going to be really gappy and I may ignore gaps in price. Sometimes I may respect gaps in price. That's essentially when the system is looking to see if a trend line is going to be drawn through a gap in price or not. So for example, on Twitter, there's quite a few gaps on the Twitter chart. So maybe I want to ignore it here, but maybe if I'm looking at something on Forex, which I never do, but if you were looking at Forex, there are no gaps in Forex. So maybe in that case, you wouldn't really need to ignore gaps in price since there are none. So for me, I generally do actually use respect gaps, enhanced, and then wick for the three inputs there. And you'll see here, in this case, this is pretty much exactly what I'm looking for. I'm always looking for this type of setup where we've got either a symmetrical triangle or a broadening formation. So, I could either choose this broadening formation here or the symmetrical triangle. Let's just delete these two and focus on the symmetrical triangle here. And then from here, you're able to add whatever else you want. Moving averages, Bollinger Bands, whatever your style is. If you want to add a MACD or any lower indicator, you just go to indicators and then you just search, let's say MACD, you'd click on it, it would pop up on your indicator list here and you click apply and it will pop up in this indicator list. So we've got this symmetrical triangle on Twitter. Let's say that maybe you are going long Twitter. Maybe you think Twitter is going to have some type of move up right to this point here. What you can do is you can right click and create an alert on this line and you can add something called sensitivity. So notice a couple times when we were near this trend line, actually a lot of different times, we were near this trend line, but we didn't actually touch the trend line. The wicks were close to it, but not right at it. What the sensitivity feature does is it allows you to have some margin of error around that line. So then you're locking in a range of prices rather than just, hey, alert me when the price hits this line that's 1 cent wide. And you really don't have a lot of flexibility there. So this is something that allows you to really pick up on price action without having to be right on the money. So this is nice because you can choose what confirmation candle you want. Maybe you're a longer term trader and you really want to make sure that daily candle closes within this purple area or touches it or whatever the case is. You would choose a session or a daily confirmation candle. Those are the two candles we have for the daily. Now, if you wanted to simply just know when the price breaks through this line and closes through it, you wouldn't need to use sensitivity. You just use this breakthrough button right here. So if you want to know when the price actually breaks through with conviction and closes above it, you'd use the breakthrough. If you only wanted to know when the price touches that line or anywhere within X amount of dollars of that line, you would use the touch button. And then the bounce button is kind of a mix of the touch and the breakthrough together. So it really just depends on what type of a trader you are. Some people look at this chart and say, yeah, that's interesting, but I'm not touching it until it breaks through to the upside or the downside. So if you're that type of trader, maybe what you're doing is you're just creating an alert on each side, breakthrough below. Let's say that we want to know when the 10-minute candle closes below. We can name this symmetrical triangle support. Spell that. Maybe short the close below this line, whatever your note is. Choose your expiration. Let's say 10 days up to 90 days, depending on what plan you have, and then you just set it and forget it. So maybe I want to know after 20 days has this broke through or not, and then I create the alert. I then do the same thing on the other side. So breakthrough, we don't need sensitivity if we're just wanting the price to break through that exact line. Choose the confirmation candle again to the 10-minute, name this just symmetrical triangle resistance. Go long through this line, and then choose your expiration. So now, rather than you having to guess which way price action is going to go, you simply set parameters and you wait until the price action tells you what's happening. A lot of people try to trade within these patterns, which is fine. I sometimes will do that, but most of the time I'm waiting for some type of breakout or some type of conviction by price action. So rather than guessing which way the price is going to go, just let the price action determine that for you based on when these alerts go off. So the alert will go through your phone or your email. So let's say that you're at the grocery store, you had to go to the store for something, during market hours, and this this has a huge move and breaks through resistance, you'll get that alert on your phone. And then if you have access to a mobile brokerage app, then you just go in and make the trade. So this allows you to make that whole process of watching charts a lot more efficient. So you're not there watching the screen and staring at the screen all day. And, quite frankly, that's not the best way to trade. If you're just staring at price action all day, you become emotional, you become impulsive, you get bored, and you're like, oh, I've been watching price for an hour and I haven't clicked a button. That's not a way to trade unless, I don't know too many people that can trade like that. Most of the most successful traders I know are swinging a position, holding overnight, or days. I mean, me in general, I'm definitely not the world's best trader, but I'm trading, swing trading or position trading. I'm not looking at the 5 minute candle to see, what's going on. Generally for an entry, I'm just using the line chart to get an idea of what trend is doing. And honestly, a line chart a lot of the time can tell you that without anything. However, if you are a day trader or more of an intraday trader, you can put these alerts on, let's say, a 5 minute chart. So this is something that can be applied to any type of trader. If you're on the daily chart or you're swing trading a position, you probably shouldn't be on the 5 minute chart. But if you're on you're on more of a day trading type of style, then you're definitely going to want to have the 5 minute chart open or something like that where you're scalping. So this alert system can be used for any type of style of trading. And these alerts can be created on anything. So we created them here on the trend lines, but let's say that we pull up maybe the SMA 5. You could put this same type of alert on the SMA 5 under properties. Sorry, not properties. Create alert this at this line, and you can increase or decrease your alerts that way as well. So this is something that really allows you to have the system do all the hard work for you. NVIDIA is a good example of this. Not a trade that I took, but I am an AMD. And so you can see here, notice how many times we've touched this trend line above and price rejected multiple times at this level. So, this is a really, especially let's say that you're trading options and you really want to sell that impulse move right at resistance. This type of alert is going to allow you to see when the price gets to that area, and lets you make a trade without having to be in front of the screen. So NVIDIA is a really good example of this. You can see multiple times price has respected this line at this point. And the alert system is just really good for that. We do have another alert system called the multi-factor alert. I personally don't really use lower indicators a ton. I do sometimes, like for example, here on SDC, this is a trade I'm in right now. It's worth noting that the MACD could potentially cross right here, but generally I'm not doing that. However, people do use them. And so what I wanted to do was just touch on how you can use this. Let's say that you really want to know when the MACD crosses to the upside, maybe the MACD fast crosses up through 0.2 or something. You can go into create alert, multi-factor alert, just MACD bull cross, and you can add a parameter, which is simply just the daily indicator. And you can see here MACD crossed up through the constant level of 0.2. And then once that condition is met, then you get the alert. So you're not having to just watch the chart all day. The system is doing a lot of this work that really, shouldn't be done by the human eye. It's just you find the setup, and then once that setup hits, that's when you take action, and you don't always have to be in front of the screen to do that. Let's say that you're more of a price action trader and you're looking for a potential hammer or something else on the chart. You could go to condition. Maybe on SDC, I'm looking for a bullish engulfing candle. I could go to the weekly chart, candlestick pattern, type in bullish engulfing, or I just have to type in bull and bullish engulfing will pop up here. So whenever the weekly candle closes as a bullish engulfing candle, I'll be alerted. And this is for even like, let's say 5, or maybe you're looking for an overextension of a move. You could go to daily candlestick pattern, 6 green candles in a row. Whenever 6 green candles in a row have happened, you'll get an alert. Maybe that means, I don't know, maybe that means to you that there's momentum and you want to add. Maybe that means you think it's overextended and you want to sell. Whatever type of trader you are, this would be a really nice alert to have. So the nice thing is you can go and test this strategy out. So SPY is one of my favorite examples of this because there were so many people that thought the market was going to crash after our big 5-month move up from April to August. And we did have a little bit of a pullback, but that was about all we got. Um, but what's interesting is you could go and you could back test and say, what is the return after 5 green candles in a row have happened on the monthly chart? So you'd go to strategy tester, you'd go to, you'd make sure that you're on the monthly chart and you're on the candles chart type. And let's say that we want to maybe test over X amount of candles. We're on the monthly chart. So, 2000 candles is plenty because that's a lot of monthly candles. And then you could go in, entry condition is simply monthly, 5 green candles in a row. And all you need to do is go to add parameter, condition, candlestick pattern, and you just do 5, and it would show up as 5 green candles. And then you can choose your exit condition, whether that's maybe your exit condition is when the MACD crosses down, or maybe it's simply just what's the return after 12 months. That's what I have here. So exit condition is number of candles passed, and I put 12 in there for one year pretty much. So what's the return after 1 year once these 5 green candles have returned? A lot of people think that's bearish. The back test will tell you that is very bullish. On average, after 12 months, after the 5th candle is closed green, the average return is 13.35% over 1 year. So, all these people who are freaking out that we're going to crash because we just gone straight up, this would have been nice for them to look at the back test and say, well, maybe I'm wrong here. Maybe we're just going to continue to grind up. So it doesn't only tell you your mean trade return, but it also tells you your win rate, your loss rate. So in this case, over 28 years, 92% of the time, whenever there's 5 green candles in a row, there's a pretty strong chance that you're going to close green after a year. And you can see this on the chart. Anytime there's an entry or an exit, you'll see that on the chart here. And you can see this is something that's pretty interesting. This little cloud right here. Notice how we had 5 green candles in a row. The system took the trade here on the next candle. And you can see we've had 5 months now. And this cloud pretty much shows over the last 28 years, it takes into account all of those recent entries and exits, and it paints it out as a cloud. So you can see right now we're trading above this upper cloud, which tells me that this is the strongest move that has ever happened for the market after 5 green candles have happened. Let's say that we moved down and moved closer to this blue line. We would know that we're trading right around the average return on this type of signal. So this cloud, if you're familiar with how hurricanes work, let's say a hurricane is in the middle of the ocean and they show that cone of where it could go. That's essentially what this is for price action in a specific signal that you're back testing. And it's funny, I actually came up with this idea while watching the Weather Channel because it's very similar. You're just looking at a set of variables and you're looking at over the X amount of years, how have these variables performed in the past? And this is just a visual representation of that. So the back tester is really nice. And the biggest thing about the back tester is simply this point right here. So the performance chart, if you would have traded SPY perfectly over the last 28 years, you'd be up 330% if you were just trading every time there's 5 green candles in a row and you buy after that 5th green candle closes. Or you could have just held SPY over the last 28 years and you'd be up 750%. So taking this trade isn't actually beating buy and hold, but what it's doing is it was telling us that the broad markets are likely going to be strong into the next year after this last candle closed. So it can give you an idea on sentiment, on, get an idea. All right, SPY is strong, so likely the rest of the market's going to be strong. And that's kind of what exactly we've seen. So this is a nice visual representation of that. Now you could also go and use this in the scanner. So let's say that you wanted to go and you wanted to look through the S&P 500 and you wanted to say, condition, session, candlestick pattern, 6 green candles in a row. We'd be able to go and scan the S&P 500 and see which stocks have 6 green candles in a row. And you'd be able to find those stocks without having to create an alert. You'd be able to just do that. Now, one thing I'll mention here, and this is important for those that use hollow candles. the system is actually taking into account a red hollow candle as a green day. So technically it closed down, but what the system is making this a function of is if this is hollow or not. Anytime you have a hollow candle, whether it's green or red, it means that the close was higher than the open, showing that, buyers were technically in control from the open, and that's what it's a function of. So if you do see something like this, you're like, well, there was 2 red days here. You just have to look at the candles here, and you'll see it that way. So that's how you can do that. Len is another example of this. This is more of a pretty solid one. This is just straight up 6 green candles in a row. But just wanted to point that out if you are doing a scan and that type of result comes up. Another thing that's really interesting is the ability to use the current candle. This is something that I use quite a bit. So if you go to monthly and you wanted to look for, let's say, a bullish engulfing candle that's currently forming for January, you'd click on current candle. So when we run the scan, we're actually scanning bullish engulfing candles on the monthly chart for January. So January has not closed yet, but being able to scan for this type of setup allows you to get an idea of what's going on, before the market actually closes for the month, or a specific stock closes for the month. So this really allows you to see, in this case, you can see we're engulfing this previous candle. It's the 25th. So it's the 25th. I think is the 31st on a Monday. No. So this is the last week of trading. So maybe you want to run this scan 2 days before the monthly candle closes, because if you run this scan too early, a lot of price action can happen in 5 days. This may be a bullish engulfing candle today, and by Thursday, it's not a bullish engulfing candle anymore. So being able to run this scan towards the end of a period, whether that's a 5-minute candle period or a monthly period, you definitely want to do it towards the end, because if you do it too soon, you may find something that changes 2 days later after you found it because you just didn't, you looked too early. So the current candle is something that's really nice, and you can use this as a swing trader, position trader, day trader. It doesn't really matter. Nick, are there any particular stocks you'd want me to go over to show some of these examples on maybe the volume shelf or something?
Yeah.
Before I do that, I just quickly want to touch on the raindrop chart, because that's probably one of the more popular and unique things on the platform. So the raindrop chart is a volume-based chart. So here is a regular candle, a hollow candle. If we go and split the screen and look at the raindrop chart, let's pay attention to this candle right here that has the arrow, and we'll change this to the raindrop chart. The raindrop chart has 2 main characteristics. So let's look at this one. And hold on, let me pull up a diagram. This would probably be better for everyone to check out before we go over an example here. So raindrop. All right. So can you guys see this this diagram here? Let's see. Yeah, I think you guys can. So the raindrop is a volume weighted chart. So if you're familiar with a price bar, you have your left bar, you have your right bar. Generally, that's an open and then a close on the right. With this, you have a volume weighted average price for the first half of the time period you're looking at on the left, and then your volume weighted average price for the second half of the period you're looking at. So if we're looking at a daily chart and a daily candle, this left bar would be the volume weighted average price for the first half. This right bar would be the volume weighted average price for the second half of the day. On top of that, you have the volume profile overlaid on top of the candle. So this allows you to essentially see where is the volume coming in at different prices within the day's range. So this really allows you to see what's going on without having to go into a 2-minute or a 5-minute chart to see, oh man, there's a big move up from $10 to $11. Where did that volume come in? This raindrop will tell you all of that information within the single daily candle. So you have green raindrops, you have purple or blue raindrops, and you have red raindrops. When your volume weighted average price during the second half of the candle is higher than the first, it is going to be green. Similar to a regular price bar, if your close is higher than your open, it's going to be green. Neutral raindrop is going to be when your VWAP is equal on the first and the second half of the candle. So pretty much a volume weighted doji. And then the bearish raindrop is just going to be the opposite of the bullish, where your VWAP is lower during the second half of the day than it is during the first half. And there's really three ways to use this. So you can see the volume flow within candlestick wicks. You can see the volume flow around support and resistance zones, which really works well with these candlestick wicks. And I'll go over an example of that here in a second with Spotify. And then you can look for discrepancies between candle colors. And I'll go over an example of that. That's happened 2 times in a row now over the last 2 Fridays on SPY. So Spotify is an example here. We have our typical candle here right at resistance. You can see here I just extended this trend line and we hit resistance again back in late October. And then you can see this same candle, but it's in raindrop form. Now, what you can see with Spotify here is there's no volume within this wick. So you can see this wick, we moved through this resistance line intraday, but we actually closed below this line to end the day. And here you can see there's really no volume at all during that intraday price action. It's pretty much flat. We know that that price moved up on likely very low volume because there's barely any volume here at the top of the range. So this is a great example of seeing, okay, technically we didn't break out, but we did break out intraday. Let's see if there's any volume supporting price up there. In this case, there wasn't, and we've got a nice pullback after that. Now, if we go to an example like Lowe's, around the same time period, this was in October, you'll see something very different. You'll see the same exact setup. The setup is essentially we've got this diagonal resistance. We have a close below the resistance line, but we do have that intraday price action that moved up throughout the day, shown by this wick. But then if we go to the raindrop, we'll see pretty much opposite of what we saw with Spotify, where a lot of that volume, you can see this bulge of volume here is above resistance. And you can actually see what happened is, and this is a big fallacy in the market. Prices have to go up because increased buyers, and prices have to go down because there's an increase in sellers. But that is very false. It's all relative, right? So what happened on this candle was there were very aggressive buyers that were coming in intraday here, pushing the price up, pretty much gobbling up as many shares as they could at whatever price. And that's what moved the price up intraday. Now, what likely happened, or what I'm positive happened, was those aggressive buyers were done for the day. And let's say it's 3:30 and those buyers were really aggressive all day, shifting the demand curve to an uptick in quantity demanded. They're pushing the price up, but when they're done buying and there's no more there's no more buyers to sustain that aggressive demand, the demand curve shifts back over and supply and demand are back into an equilibrium at a lower price, not because sellers came in and pushed the price down, likely because those buyers were just done buying for the day. And we know that because all of that volume was aggregating at the top of the range. So we know there was conviction by buyers at the top of the range here, shown by this big bulge of volume at the top. So raindrops are really useful around these resistance and support zones because you can see what's going on behind the scenes. You don't have to go to the short-term time frame to see where those volume bars came in. You simply go to the raindrop and it tells you all of that information within one candle. And this is something that's completely changed the way I've traded. I started trading when I was 12 years old. I'm 28 now, so I've been trading about 15 years, and these have completely changed the way I look at the market. Supply and demand are crucial. Understanding how those curves, supply and demand curves, and their shifts work, because prices don't always move just from one side of the story. Prices didn't drop just because sellers came in. Prices could have easily dropped because there were no buyers below, and prices had to drop in order to find buyers. That's not a function of selling. That's a function of demand. So that is something to always keep in mind with price action. Is there's more than one way that prices can move. It's not just because buyers came in or sellers started coming in pushing price down. Any questions on raindrops before we get started into the volume by price and the anchored VWAP or anything like that? Let me just show this one example on SPY, and we'll do that here in a second. But you can see here, last 2 Fridays ago on January 15th, we had this really red candle here. However, if you go to the raindrop chart, it was actually green. So you have a discrepancy in price here where you've got this red price action, but then you have a green raindrop showing that buyers are actually in control. And you can see that conviction by the buyers at the top of the range. So this allows you to essentially see what's really going on, not just through price action, but through actual volume and supply and demand moves. So this is the discrepancy where you look at the candle versus the raindrop. Anytime the raindrop is showing something, I'm generally using that as kind of my go-to. If there's a red raindrop but a green candle, I'm looking more at the fact that it's a red raindrop than a green candle. So that's something that's really powerful and allows you to kind of see things in a really different way. Where do we go to select raindrop? So the raindrop's at the top corner here. So if you go to this area right here and you just click this drop down, you can choose from these different chart types. Raindrop is the second to last one. Pablo, TrendSpider blows TradingView out of the water. Definitely. I've used both. I used to be an affiliate for TradingView. You're not going to get any type of customer service from TradingView. They really have no type of customer interaction. It's all canned responses, and it's really a low touch or no touch SaaS company. We are really focused on customer service because trading in itself is stressful. You don't want to go buy a software, not know how to use it, and then you've got money on the line as well. So we definitely focus a lot on the customer side as well. Zoom without using the trackpad. Yeah, you can just grab these axes. So you can grab the y-axis and just move it up and down. You don't have to use the trackpad. So when I'm on my laptop, I'm generally using the axis to scroll in and out and zoom. I'm just using both of these two things right here to answer your question, KPO. Any other questions before we jump into the last part, which will be the volume by price and the anchored VWAP? Alrighty, no questions. Then let's move on.
Yeah, if you can go into like scanning for the volume shelves, I think you said that on one of your Twitter posts the other day.
Yep.
And a good example, obviously, that you could definitely bring up is Palantir for sure.
Yeah, PLTR is a great example of this. So PLTR was a great example of this. So kind of to give you guys a little background on what is the volume shelf, what is the anchored VWAP? So this is something that was created by Brian Shannon, at least the anchored VWAP. The anchored volume by price is something I kind of took that concept of anchoring and applied it to volume profile or market profile. And what you can do is you can essentially see to answer your question, KPO, no, you can only use the timeframes that are predefined here. But the way to do this is you want to anchor from status quo changes in trend or the overall market. So you can see here on PLTR, we've got this green circle here, and I have a VWAP started from this point. So what I'm saying is, since PLTR broke out in early November, what is the volume weighted average price since we broke out? And you can see how well price action will respect this line over the next few months. Now, on top of that, we have something called the anchored volume by price. So if you're looking at regular volume, these volume bars are a function of time. Each volume bar is telling us how much volume occurred during that day. Well, what we want to know is we want to know where's that volume actually occurring at different price levels. So same thing here. If I anchor the volume by price from this breakout point, because that's where the status quo changed, that's where we started a new trend essentially. You can see here that a majority of shares were holding right within this 26 to 27 area. And so what happens is it's supply and demand once again, right? You always need, for this type of move, especially with PLTR, you definitely need to have demand. However, you can see these areas here where the price kind of bounced off this volume shelf. And that was likely because almost everybody since this point here was holding right around 26 to 27. So what happens is if everybody is holding at break even, a lot of people stop selling because they don't have any profit to sell. They have no profit margins. So why would you sell just to sell unless, you're just a novice trader and you just are trying to catch the biggest move? Technically, you could sell if you see an opportunity cost somewhere else and you think, okay, PLTR is not doing anything, I'm going to go chase something else. Well, look what happens when somebody does that. They miss out on a massive move. So the volume shelf is an area where all of these shares are holding at break even. And these volume shelves, this essentially aggregate of different volume nodes that are highlighting different price zones. So each one of these little bars, rather than representing a day, it's representing an increment in price. So each one of these tells us where these shares are holding. And it allows you to see where a majority of shares break even. If the price is way up here at 36, we know that there are a ton of shares now holding at quite a big profit. And so this allows us to see, is something really in the profit, meaning are there a lot of shares holding profit? If the supply, if the volume shelf is above a price, it's going to act as a supply zone. Because let's go to Facebook. This was a good example of this. So you'll see here, let's say we anchor the volume by price from the start of this broadening formation. This was when the trend changed. This was our swing high. So that's where we want to anchor it from. And we don't want to anchor it from the bottom here because there's only 5 days. So there's not a lot of price action to measure yet. So you definitely want to make sure you've got at least a month or two of price action to measure if you're going to anchor a volume by price. Now, what happened here is we have the anchored volume by price. Let's say that you're holding Facebook down here at 246. Well, let's say that let's say that you're dealing with a drawdown at 246 and you bought it up here at 275. Well, if you bought at 275, you're dealing with a 10% drawdown within a week. But what happens when the price gets back up to this area and you're back to break even? What are probably a decent amount of people going to do? They're probably going to break even and sell and move on and say, well, I just dealt with a 10% drawdown. At least I didn't lose money, but I'm going to take my money elsewhere. This is the supply zone. This is why we call this overhead supply, at least initially, because all of these shares that just dealt with a 10% drawdown, there's going to be people who are selling because they got back to break even and they're like, all right, I'm out of here. So you could call this break even supply, meaning, these shares got back to break even. Some of them are taking their money and going elsewhere. And then this area initially will act as supply. As you can see, acted as supply for a couple days before we finally closed above it today. So this is something, anytime the price is below one of these volume shelves, it's initially going to act as supply. Anytime the price is above one of these volume shelves, we're going to call the volume shelf below break-even demand, because that's where a bunch of people demanded the stock. As the price moves back down to this area, people are back to break even and they no longer are going to sell anymore, which dries up the supply. So you can scan for these types of setups. If you go to the market scanner and you just type in Jake's, or just type in Jake and it's Jake's volume shelf scan, you can scan these different things here and you can see these different setups popping up. So this is UPS. Let's go to Twitter because that's a clean chart. Get rid of all these annotations. And what I'm looking for here is we have an automated volume by price. So you can see that I'm moving this. Let's say that I want to start it from here, or maybe I want to start the volume price by price from this breakout here. You can move this around, or you can use an automated approach, which will anchor the volume by price from a specific X amount of time. So in this case, I'm looking for the volume by price over the last 15 candles, and I'm looking for the highest high. So over the last 15 candles, it takes the highest high, and the way it works is it's kind of like this continuous 15 candle thing. So it's looking over 15 candles and then it's continuing that until it finds this pretty much this swing high. So you'll notice there's more than 15 candles here, but it's picking it from here. So what you would do if you wanted to automate this, you just click volume by price, click these 3 dots, and you do anchor to, in this case, highest high, window of 15, apply it, and it will anchor it. So in this case, it took this highest high right here, and it anchored it. So let's get rid of this one here. So you can see here from this point in time when we pretty much shorts capitulated to the upside, that's where we are anchoring from the swing high. And you can see a majority of shares are now holding here. Now, what you also have here is a volume gap. And a volume gap means there's literally no liquidity above. There's not a lot of shares holding above, which would, like we just talked on Facebook, if we've got a lot of shares holding up here, then there's probably going to be people selling as we move up. But there's no liquidity here. There's a volume gap. So if the price starts to move up here, there's not a lot of people or supply pressure, coming onto the market to sell. The next place that you're really going to find supply is way up here around, let's say, $54 or $55. So these volume gaps, price can move through very quickly. And so this is definitely, if you did want to play around with the anchored volume by price and find these volume shelf setups we post a bit about on Twitter, you can use Jake's volume shelf. This is something I created, and it is public to everybody using the platform. So if you do want to try it out, it is part of whatever subscription that you get, and you just go to the market scanner, type in Jake, and it's Jake's volume shelf scan right there. So the last thing I'm going to quickly go over, and this is a cool case study on Apple. So Apple is one of those plays that we broke out today. We had some crazy price action here. But what's interesting is you can go and you can see the seasonality for a particular day of the week, a month of the year. So if you go to sidebar and you go to add or remove widgets, you can add a new widget, and one of those is seasonality. So when we have seasonality right here, you can click done, and you can actually see how is something moving over a particular point in time. So maybe we want to see how has each day of the week, Monday through Friday, how has that performed since a specific point in time? Well, since we had the massive March crash, I want to know pretty much since we bottomed in late March, early April, how has each day of the week performed? Because that's when the status quo changed. That's when a new trend emerged. So if we start since April of 2020, you can see Monday has a very strong win rate. 75% of the time, Monday has closed green since we bottomed in April of 2020. So you're able to go in and see, all right, well, since April, Mondays have a very bullish sentiment. That doesn't mean there's a 75% chance Monday's going to close green. It's just telling us 75% of the time since we bottomed, Monday has closed green. So it's really up to you how you want to infer that as a trader. But this is also a good example here. Notice how we've got the anchored volume by price from the swing high on Apple. We've got this volume shelf forming, and then we've got a nice move up pretty much 4 days in a row at this point. So there's a lot of different ways you can use the platform to make the whole process of technical analysis more efficient. You can use seasonal trends, not just technical analysis, to get an edge. And if anyone has any questions, I'm happy to answer. But we do have a 25% off coupon code. Nick, if you want to post that in the chat or in your chat room, you guys can check this out for 7 days free. If you want a little more time, you can extend that for another 7 days. Yeah, happy to answer any questions and appreciate everybody's time for those that joined live, but also those that are watching the recording.
Yeah, Jake, I'll post that in the chat as well as on all my social media platforms.
Beautiful. Awesome, man. Well, definitely appreciate everybody's time and checking this out. If anyone has any questions as a user already of TrendSpider and you want to, if you have a specific question, hello@trendspider.com. Our customer success team is answering emails all day or inquiries or whatever you have a question on. So definitely that is the resource to use if you have any questions getting set up, any questions about your account or anything like that.